Today, let's understand Canada's anti-money laundering and anti-terrorist financing rules for accountants. Money laundering and terrorist financing are global problems. They threaten economies, financial systems, and public trust. In Canada, accountants are considered gatekeepers to the financial system. This means they can be misused, intentionally or unintentionally, by criminals. Because of this risk, Canadian law requires certain accountants and accounting firms to follow strict AML rules. The main law is called the Proceeds of Crime, Money Laundering, and Terrorist Financing Act. It is enforced by a government agency called FINTRAC. Not every accountant is affected. The rules apply only when you perform specific triggering activities. Triggering activities usually involve handling client money, transferring funds, buying or selling assets, or giving financial instructions. If you perform these activities, you must set up an AML compliance program. This program must include 6 key elements: a compliance officer, written policies and procedures, a risk assessment, ongoing staff training, a documented training plan, and a full review every 2 years. Knowing your client is one of the most important requirements. You must verify identity, understand ownership structures, and identify beneficial owners. You must also assess whether your client is high risk. High-risk clients need enhanced monitoring. Special rules apply to politically exposed persons and their close associates. Large transactions involving them require extra checks. Record keeping is mandatory. Records must be accurate, complete, and properly stored. Some transactions must be reported to FINTRAC. This includes suspicious transactions, large cash transactions, large virtual currency transactions, and terrorist property. Suspicious transactions must be reported as soon as practicable. You are not allowed to warn the client. Transactions of $10,000 or more within 24 hours must be reported. This applies to both cash and virtual currency. Recent changes to the criminal code have increased personal risk. Even recklessness can now lead to criminal charges. FINTRAC can examine your firm at any time. Penalties can be financial, reputational, or criminal. The key message is simple: know your clients, document everything, stay alert, and keep your compliance program up to date. This protects your firm, your profession, and Canada's financial system.